Icon plc is an Irish company that is integral to the pharmaceutical industry, and many people have not heard of this company. But what's interesting about Icon plc is their stock, ticker ICLR, is currently at 52-week lows and is now in 5-star price range from Morningstar, a very coveted place to be. So let's talk about what Icon does, why their stock is down so much, and if I think it's a buy today. Let's start with what they do. Like I said, this is a company that is integral to the pharmaceutical industry. Icon is the world's leading clinical research company, and they're a global provider of outsourced drug and device development and commercialization services. Their customers include 18 of the top 20 pharma companies, as well as smaller biotech companies, and they also serve the US government for issues like disease prevention, health promotion and education, and more. Essentially, they provide consultation and commercialization services to pharmaceutical companies. They help them get their new drugs to market. As you can imagine, it's a very difficult process to get a new drug to the public, right? There's a lot of safety and regulatory hurdles to jump through, and it takes a really long time. It's a confusing process, so Icon is here to help. They can take pharma companies through every step of the process. So the first step might be actually planning out their clinical trial. So Icon can go out and physically select a group of patients to be enrolled in the clinical trial. They can recruit these patients and manage them. They can actually execute the clinical trial, so make sure that it goes smoothly, make sure that all regulatory requirements are met. They can ensure FDA compliance. As we know, the FDA, which is the Food and Drug Administration here in the US, has lots of rules and regulations around new drugs. And they can also help manage the data and provide statistical analysis after the clinical trial is completed. Then they can even help companies commercialize their drugs and get them to the market. So Icon is essentially Big Pharma's partner. They're quiet, small partner because Icon is only a $15 billion company. So I said this is a vital company, but their stock is hitting 52-week lows, down 31% in the past year and up only 19% in the past 5 years. Those would be some pretty awful returns if you had been invested in Icon. So what's going on with the stock? Well, most recently, Icon dropped over 20% on their third quarter 2024 earnings results. This news is a bit old, so I'll have Morningstar help me summarize it, but essentially they reduced their 2024 guidance. So they reduced revenue guidance, which is sales, that's your top line. They reduced that by about 3%, and they cut their earnings, which is profits or bottom line, they cut that by 7%. The reason for this was an increase in cancellations by their pharma partners. Pharmaceutical companies are very sensitive to interest rates because when interest rates are low, they're able to borrow a lot more easily, and developing a new drug is extremely expensive, so oftentimes pharmaceutical companies need to borrow a lot of money to begin developing drugs. Now, the nice thing with Icon is that they partner with, like I said, 18 of the top 20 pharmaceutical companies, and they've helped bring to market 18 of the top 20 best-selling drugs. So their partners are quite resilient, but even still, it is a tough time to be a pharmaceutical company. The bright side is that Icon's backlog actually grew 9% year over year. So they say it's up 9.4% from quarter 3 of 2023. So even though their revenue is down year over year, the fact that their backlog is up shows that it's not necessarily that there's no demand for Icon services. It's more just a timing issue, if you ask me. Keep in mind that backlog represents orders that have been committed but not actually fulfilled yet. These are people who have said, yes, Icon will use your services, and Icon says, great, we can squeeze you in next year, or something like that. As Morningstar says here, some of Icon's customers are undergoing budget cuts and reprioritizations of their pipeline candidates. We have to keep in mind that Icon doesn't just serve those big customers, they also have some smaller biotech customers who are really hurting right now. Morningstar maintains their fair value estimate of $268 per share, and with shares currently trading at $187, it's a steep discount from what they think shares are worth. I don't want to get into politics too much, but there's also another bit of news that sent the stock down, and that's that the President-elect of the United States, Donald Trump, has elected a new Secretary of the Department of Health and Human Services for the United States, and he's seen by the public as an anti-vaccine activist. Now, he claims that he's not anti-vaccine, he's just anti-forcing people to get vaccines. However, the market does believe that this might take a toll on vaccine companies and pharma companies, which Icon partners with. So you can see how things like this would trickle down to Icon. And that has led to this dismal stock performance. It's actually down 37% in just the past month. I believe this happens to be an overreaction, but let's analyze the business more holistically and talk about the fundamentals. Now, one thing that I like to look at when analyzing companies that are growing, like Icon was/is, is their shares outstanding, because sometimes when companies are growing really fast, they're also diluting shareholders really fast. That means they're issuing more shares, usually to pay things like stock-based compensation, which goes to their employees to help, thank them for doing a good job of making more sales. Now, Icon typically does have a history of buying back shares, so you can see that their shares outstanding have been decreasing, which is good. That means that as a shareholder, you own more and more of the company. But then all of a sudden, there's this giant spike in 2021, and it has stayed elevated ever since. What the heck happened there? Well, in July of 2021, Icon closed on quite an expensive acquisition of a company called PRA Health, and they paid for this acquisition partially in cash and partially in shares. So these shares were created and diluted the shareholders. However, you're also getting this bolt-on business. So even though you own less of Icon, you also own PRA, if that makes sense. The combined company is still called Icon. Now, Icon claimed that this would be a great value for shareholders and would help spur double-digit revenue growth for years to come, and it did for a time, but as we can see now, they're back to single-digit revenue growth. So maybe this acquisition wasn't the best thing, or maybe they're still ironing out the kinks. But that's one thing to keep in mind. When we go to their website, it says, "We mainly have grown organically, but have bolstered our growth through a number of strategic acquisitions." So they made an acquisition in 2024, 2023, 2021, the big one, 2020, 2019. So acquisitions are nothing new for Icon. However, this was the largest one, and it's also the one that they also paid for with shares, not just cash. So it's worth looking then at their balance sheet, because when a company makes an acquisition, it usually weakens their balance sheet because they have to fork out this cash to buy this smaller company. When we look at Icon's balance sheet, we can see that their current assets, which is any asset that can be turned into cash within the year, that is almost $4 billion. And their current liabilities, these are things that come due and payable within the year, is almost $3 billion. So, okay, so their balance sheet is still holding up. They do have more current assets than current liabilities. However, it's not the strong balance sheet that I typically look for in a company. But the nice thing is, this is Icon's cash flow from operations, and we can see that it has been on the rise. So this is annual. We can see that their cash flow from operations have this really strong upward trajectory. Now, when they acquire these companies also have positive cash flows, so it produces this kind of compounding effect. But essentially, Icon makes over $1 billion a year in free cash flow from operations, so I'm not too worried about them being able to pay off this debt. Let's look now at Icon's valuation. So as you know, a great company can be a bad investment if you pay too much for it. So that's why valuation is important. I still believe that at the end of the day, buying a wonderful company at a fair price is better than buying a fair company at a wonderful price. But what we want to try to find is wonderful companies at wonderful prices, right? That's the best of both worlds. So Icon, to me, looks relatively cheap. Unfortunately, they have quite low gross margins of just 29%. However, you are rewarded for that with a low price to annualized sales of less than 2, a PE ratio of just around 21, and price to free cash flow of 15. So this is quite an inexpensive company on most metrics that I look at, even with the low gross margins. And the nice thing is that they don't spend a lot of that gross profit, so only 35% of their gross profit goes to selling, general, and administrative, and nothing goes to research and development, which is kind of funny because they're a clinical research company, but they are other companies' R&D spend, right? So they themselves are not spending on R&D. Other companies are spending on R&D, which is Icon. It's interesting. However, let's put all that aside and take a look at Icon. I think the company does present a decent value today. We have a low price to sales, low PE, and low free cash flow. That's a good starting point, but the company needs to continue to grow their revenue. Even though their revenue growth in the past quarter was negative, they're expecting 2% revenue growth for the year, so it's still positive, and that 9% growth in backlog shows me that this revenue growth will probably accelerate and get better and better as time goes on. Like I said, this is a company that's integral to the pharmaceutical sector, and there's a lot of turbulence in the pharmaceutical sector right now. So a lot of times what tends to happen is when bad news comes out, the market sells. And when people see that stocks are selling off, they sell off because they don't want to hold any bags. So what tends to happen is that the market overreacts to bad news, and the same thing happens on the upside. The market can overreact to good news as well. But what I think we're seeing right now is an overreaction to bad news for Icon. So the earnings report and the geopolitical issues that are going on right now have sent the stock down almost 40% in the past month. I don't think that's merited. I think at the end of the day, this is still the same Icon that has been around and trading on the NASDAQ since 1998. sheet. This is not some new biotech company. This is not some company that's going to disappear overnight. This is a company that has staying power, that has proven itself, and I think that it's trading at a discount today, based on what we talked about. It's very important to the pharmaceutical sector. Typical valuation metrics are below the typical company in my portfolio, and I expect to see them returning to a bit stronger growth in the years to come. Additionally, they provide strong free cash flows, and their balance sheet is decent, so they won't have any kind of issues staying afloat. What do you guys think of Icon? Let me know in the comments below, and if you liked this video, please hit the like button. As always, this is not financial advice, just my thoughts on the company. Please make sure to do your own research before investing in anything, and thanks so much for sticking around and watching the whole video. I hope you have an amazing day.